Today we are going to discuss about the exemption to the general rules of income tax. These are the exemptions which are given to the assessees from calculating tax. So, person leaving India within an intention not to return to India during the relevant assessment year. If a person that means 2020 21, if a person leaving completely from India and moving into other country, so that person is exempted from income tax. And there is another exemption rule, that is income of non-resident shipping companies has to pay tax if the passenger or cargo before leaving the port in India. If a company has to pay some tax on cargo which is leaving from India, but it is not a Indian company, still they also have to pay tax before leaving. Next, the next exemption rule is income of discounted business under section 176. Any person discounting the business or profession shall inform income tax department within 15 days. If any person claiming deduction according to Income Tax Act 1961 section 176, the person has to inform before 15 days to 15 days to income tax deducting claiming deducting from business or profession. Next, person trying to transfer the assets to avoid tax, section 61. So these are comes under capital gains. If any person having more assets which are chargeable on income tax, so if the person is transferring those assets to the another person, so those that percent of tax is exempted from the assessee. Next, income of bodies formed for short duration. So if persons associated for short duration, that means very less period. For example, best example is for joint venture is the best example for exemption of tax under this exemption rule. Now let's discuss person once again. Person is a natural person or HUF or a company or firm or an association of persons or body of individuals or a local authority, and every artificial judicial person comes under as person. So the person can be a natural person, artificial person. So in income tax, in these terms, all these terms considered as person. Now let's see the residential status of an individual. So if a person should a person if we are saying a person has SSC, the person should fulfill the conditions of residential status. So let's see the conditions. So there are two conditions for determining residential status of an individual. So one is the basic condition and the second is another. So basic conditions are, there are two basic conditions which a person has to fulfill before while calculating residential status of an individual. So the person should stay in India for 182 days or more in previous year or in financial year. And the next condition is the person should stay 60 days in previous year plus 365 days in last 4 years. So these are the basic conditions if for a person should fulfill for his residential status. That means whether the person residing in India or not, because according to Income Tax Act, whoever residing in India, whoever the residents of India, that person has to pay the tax. In very special cases, the foreign income can also be calculated under income tax, but 99% of income taxpayer should be resident of India. So the person should definitely fulfill the residential status for calculating the income tax on his income. So the basic conditions are the person should stay 182 days in or more than in India. And the second basic condition is 60 days in previous year and plus 365 days in last 4 years. These are the basic conditions that person has to fulfill. If a person fulfilling these basic conditions, then the additional conditions are applied. So if a person fulfilling the basic condition, that person is called as resident. If a person fulfilled the basic conditions, then there should be application of additional conditions. The additional conditions are the person should resident for 2 years out of last 10 years. From last 10 years, the person should be resident for 2 years from those 10 years, and the person should stay in India for 730 days in last 7 years. So if the person fulfilling the both conditions, basic conditions and additional conditions, then the person called as resident and ordinary resident. So now let's see the application of conditions for calculating the residential status of an individual. First, determine whether a person satisfies basic conditions or not. So first, the person we should apply the basic conditions, and we should see whether the basic conditions are fulfilled by the person or not. If satisfies one or both basic condition, then he will be treated as resident. So if the person is fulfilling the basic condition, that person called as or treated as resident. Next, if a person fails to satisfy any one of conditions, then he will be treated as non-resident. If a person fails to fulfill the basic conditions, first, in every person's residential status, the person definitely fulfill the basic conditions. If he fails fulfilling basic conditions, then the person called as non-resident. The next thing is, if the status of a person is resident, so after fulfilling the basic conditions, the person will become resident. So then only apply the test of additional conditions. So if the person is fulfilling the basic conditions and he is declared as a resident, then the additional conditions are applied to decide the residential status of a person, whether the person resident and ordinary resident or not. So if an assessee is a non-resident, then the test of additional conditions are not applied. So if the person failed to fulfill the basic conditions, then the person becomes non-resident, so there is no need of applying additional conditions to the that non-residential status person. If an individual satisfies both the conditions of the person is resident and ordinary resident. If the person fulfilling the conditions, basic conditions and additional conditions, then the person called as resident and ordinary resident. Then if a person satisfies any one of two or none of the additional conditions, the person is resident but not ordinary resident. If a person fulfills the both conditions, then the person treated as resident and ordinary resident. If a person is only fulfilling basic conditions, and if the person is not fulfilling the additional conditions, then the person called as resident but not ordinary resident. That means he may be not resided for 2 years from last 10 years. So then the person called as only resident but not ordinary resident. Now let's see the residential status of a Hindu undivided family. So here in Hindu undivided family HUF, Karta is assessee for the family income. So because in Hindu undivided family the business belongs to the total family. Each member of a person, each member of that family is a partner in the firm. So here the Karta is the assessee. So because he will be organizing the business, so he will be the assessee for the income which is earned by the family company. So he is liable to pay tax. So the members of family are known as co-parences are not liable to pay tax. So the family members are the partners in the business, but they are not liable to pay tax. The Karta is liable to pay the tax. The Karta is treated as assessee. So the member of families are liable to pay the tax on their personal income. So if the family members are having their personal income which exceeds the limit of the which exceeds the limit decided by the government, the person is personally liable to pay the tax on his personal income. Next, application of conditions for calculating residential status of a Hindu undivided family. A HUF is said to be resident in India if the control and management of its affairs is wholly or partly situated in India during the previous year. So for calculating the residential status of HUF, so the HUF is called resident if the HUF are doing their business completely within Indian territory or partly in Indian territory last previous year. So then the HUF is called resident. So if the control and management of its affair are wholly situated out of India, then the HUF will be treated as non-resident. So it is clear if the HUF not related to if they are not conducting their business activities in India, then it is the HUF is a non-resident, treated as non-resident. In case of companies and firms, so the rules which we applied to HUF, the same rules also applied to the company and firm. If the company is doing or conducting their business activities in India partly or wholly, then the company is called resident. If the company maybe it is an Indian company, but if the company it is not conducting their business activities in India, then the company called as non-resident. But here in HUF the Karta is assessee, but here the company it is artificial person. So on the seal of and the company name, the tax is calculated and the tax is paid by the board of directors or the company secretary, by the company secretary. So incidence of tax. Now the next topic is incidence of tax. Incidence of tax means the burden of payment of tax. In simple, it denotes tax liability of a person according to section 5 of the Indian Income Tax Act. Under section 5 deals with the total income. So incidence of tax means the amount of tax which the assessee has to pay to income tax department. So the incidence of tax comes under Income Tax Act section 5, and the section 5 deals with the total income. So the tax liability of an individual depends upon his her residential status. So as we discussed earlier, the tax liabilities totally depends upon whether the assessee is resident or not non-resident. If the person is resident, the person has to pay the tax. If the person is not resident, so there is no need of paying tax to the income tax department. Next, classification of income. So income, there is two types of income, that is income in India and foreign income. So income in India, that means income earned, received and deemed income to be received in India are treated as Indian income. So income earned, if the person already earned income, and the person has to receive income, and deemed income means that future income which will be received by the assessee in future. So those three incomes are called as income in India. Now there is another type, that is foreign income. If the source of income and receipt of income are in foreign country, then the income received by the person shall be treated as foreign income.